Alright everybody, welcome back to the Simple Markets channel. As always, my name is JB, and today I'm going to be breaking down day trading while working full-time. This is not to be confused with day trading full-time. I'm making this video to appeal to where the majority of you watching this video most likely are or will be in the future, and that is working a job and trying to use day trading as some sort of supplemental income to eventually scale it into something that can help you leave that full-time job. However, so many YouTube videos nowadays, they focus on the 1-second charts, 3-hour sessions a day of trading, and honestly, this is just not going to help or appeal to the majority of you who are working full-time, or even some of you like myself who have other businesses and things to attend to, and you can't spend 3 hours a day on a chart trading the New York Killzone or the London Killzone. So without further ado, let's get right into it. Now, as I mentioned, this is going to apply to more than a few people of all different kinds of situations, so I'd like to break down your situation to start. Now, some of you out there may be students, and your goal is to maybe make trading into a full-time income before you eventually graduate and get a job. Some of you out there may already be working full-time, and that is perfectly reasonable for what we're going to go over today and kind of talk about. Some of you may even be unemployed, or for some of you that just became a new parent. I know we have more than a few students in our server who just became a parent, so congratulations to them. I'm sure you know who you are. And everyone will have different time and resources as well as different motivations. And I think this is so important to kind of break down and just preface, because my goal of this video is to help some of you understand that no matter the situation, I think you can improve from a possible time frame shift or just a perspective shift on the markets. I was one of those traders who spent 4 hours a day on a chart in the past, and honestly, as I matured as a trader, I realized that the time that I can spend on the charts, the more minimal, but the more profit I can make, is far more valuable than trying to scalp and milk these charts for an 8-hour, 4-hour session a day. I also think it's important to make that mindset shift that trading is going to be a supplemental income before it becomes a full-time sustainable income. And for those of you that do learn from me in our community as well, you'll hear me preach all the time that I personally don't even think trading should be a full-time income. I think that it needs to be supplemented with other businesses, other investments or assets to kind of help limit that equity curve. Trading can have great months and bad months or mediocre months. And when self-employed as a trader, it's your responsibility to kind of invest and put money into other places or start other income streams to help lessen that equity curve and make sure that you can gain a more sustainable and consistent income. So for all of you here, some of you may just be looking to cover your bills. Others may be looking for more money to invest on the side. Quality of life funds refers to people who may like to travel or just gain extra money for vacations and stuff to take their family on per year. And then the bottom one is where I feel like the majority of people lie nowadays and is completely reasonable, and that is to leave your current job or situation that you may be in. All of these have a place in trading. And honestly, trading allows that outlet for all of these to be covered in the future. So my goal is to kind of teach you how to sustain trading while still working full-time or having other responsibilities to tend to. One of the most important topics I talk about in our community specifically is kind of scaling not only trading, but yourself and your wealth. And I think that's most importantly done through different types of assets. If you can increase the amount of income streams that you have, whether it's a full-time job and trading on the side, starting to expand into different investments or property, all of these things will generate you more wealth and also make it more comfortable to trade full-time as well. There's a lot of pressure on your shoulders if you're trying to trade full-time to support a family, but there could be bad months in the market where your strategy just simply does not perform to expectation. Or for some of you who might perform great in a certain month in the market, you may be inclined to go and spend that money on a vacation or splurge with the extra capital, but you don't save it or invest it to have it for the rainy day when down the line, there may not be a month that performs that well. It's very important to kind of know how to manage your money and your assets. And this is something I am very, very adamant on with my students that I teach personally. But I do also want to teach you guys kind of the importance of you as a profitable trader. And as you can see here on your screen, we have different asset classes that are listed out and their average ROI per year. ROI is return on investment. So real estate is known to have one of the higher returns on investment. It's about 10.6 per year. Obviously, these things fluctuate, but this is about current statistics or an average over a long period of time. This is followed by the S&P 500, or just the general stock market essentially. For those of you that don't know, the S&P 500 is just the top 505 stocks in the stock market based on performance, and it does change every year. Those that fail may get replaced by a new one who's performing better, and this is just what most investors use as a general consensus of how the market's performing. And that returns about 8.6% per year. Gold and silver as well, another fantastic investment, a great hedge against inflation. That's about 7.98% per year returns. Lastly, followed by where the majority unfortunately keep their money, and that is the US dollar, which decreases at about a rate of 3.48%. And this is due to what we know as inflation. Inflation is the amount of currency that is circulating within the market. The more that they print, the less your dollar is actually valued and the less buying power that it has in the economy. Now, all of these combined are followed by a profitable trader at the very bottom there with the greatest return of them all, which is about 20% or more. I especially want to let you know this because I feel there's a consensus nowadays, especially with this modern prop industry, that 10% a month is necessary as a trader to be great. Some of the best traders and hedge funds in the world make about 20% a year to 36% a year and fall within that typical range. And even some hedge funds will turn over negative years. And this is just kind of extremely important to understand. Now, as someone like myself who is an investor with multiple different asset classes, I actually own all of the assets that are on the screen right here. And personally, my most valued one is my personal trading account, because I understand that if I personally trade my own capital, I can get a greater return from the strategy that I use in less time than all of the other assets that I have listed on my screen here. And for any smart investors, they're going to want to put their money where they can get the most returns with limited risk as well. And I think that's where traders make such a pivotal role in the marketplace and why they're so important and the skill is such high valued is because you can gain investors more for their money. And if you can genuinely gain that skill of consistent profitability for 20% or more a year, for example, you will be highly valued by investors and money will essentially be thrown at you in the long term if you are looking for it and reaching out to private investors. And just to kind of nail this point home with an example, I had an old friend I used to trade with. His name was Danny. Not sure if he's watching this video or not, but there was a point in his trading career where he got to a consistent profit of about 3 to 4% per month, which is fantastic. And he was averaging about 40% a year. So he began reaching out to private investors or wealthy people who may be looking for places to put their capital. And he actually met a wealthy family of construction workers who had no experience in the markets, but did have a lot of excess capital that they wanted to invest somewhere else to get the greatest returns possible. So Danny ended up signing a contract with them. They lended him $10 million worth of investment capital, and the contract was signed that whatever profit Danny made on the account, he would sign over 50% and get to keep 50% of the profit himself. Now, for someone making roughly 40% a year and taking home half of that profit that they make, while leveraging $10 million in capital from this wealthy family, I'm sure you guys can do the math yourself and understand that truly the sky is the limit once that initial foundation of trading is learned and you can prove that you have a consistently profitable strategy to many different investors out there with plenty of capital that they're looking to invest and get the greatest returns they can on. Now, I'd like to follow that up a little bit with prop firms, and as most of us know it, the simulated capital prop firms. Now, these logos across the bottom of the screen, there's no promise that these firms will even be around by the time this video is posted. Regulations are coming down very hard on this simulated capital industry and these simulated prop firms that are paying you out through essentially failed challenges. However, I do think they're a great asset to be able to leverage higher income and then take those payouts to put them into your personal account or different assets like I mentioned in the previous slide. For example, myself, I do trade my personal trading account, but I am funded with firms and I use the payouts from those firms to essentially just add right back into my personal account. Keeping money personally in a regulated broker is going to always be the safest option and always has been. So don't put all your eggs in one basket and only trade for prop firms and use that as income. I do really think you should be taking those payouts and investing them elsewhere. This hedges against these current regulations that are shutting down many of these firms. So although I do believe it's a smart and consistent approach if necessary, I do want you guys all to be aware of the risks associated, but it is a great way to trade on multiple accounts and funnel those into different areas to help you grow your wealth long term. But now I want to dive a little bit more into time frame and passiveness specifically. Now, the most common thing I'm seeing on YouTube nowadays is this idea of pushing the 1-minute charts, 5-minute charts, or even some of the seconds charts. And for whatever reason, a lot of these gurus like to push the idea that you can make more money in less time by using these lower time frame charts. Now, not only is it very, very difficult to profit on these very volatile low time frames, but it now makes you time dependent in the sense that New York Killzone, London Killzone, the New York Open, all of these different times a day, you're now required to be in front of that chart at that time and for the next 2 to 3 hours to finish out that kill zone. So despite it being a lower time frame, you're spending about 2 to 4 hours on a chart per day just trying to fit in your trading session, make sure you're watching for setups that are occurring within that window. Comparative to the professional side of things, for many of the traders I've not only spoken to, but also personal research when it comes to hedge funds or proprietary firms, the data that I've collected. But the most used time frame on a professional level is actually the daily chart. And this is followed by the 4-hour chart as well in second place. And one of the lowest I've seen on a professional level so far is the 1-hour chart. Now, this also means that it is not time dependent either. So I do think for some of you that are working a full-time job, whatever hours that may be, using a 4-hour chart or a higher time frame definitely will be supplemental to you because it doesn't require you to be on the chart at a specific time of day. Myself personally, I have other businesses that I attend to, but 8 a.m. every day, I like to just sit down and set my orders. However, instead of hopping on at the New York Open and spending 2 to 4 hours waiting for that session to go through, looking for setups and sides of points of interest, I simply hop on at that time of day, see if my entry criteria is met, set my limit orders, and then can walk away from the charts and go work on whatever else necessary. I think this is extremely vital for some of you who are working full time or have other responsibilities to be able to create that passiveness on a chart. Not only is it easier to trade the higher time frames, but you're going to spend much less time on the chart, and based on common misconception, you're actually going to be able to profit much more easy in my experience and the experience my students have had, compared to those trying to really milk these 1 minute or seconds chart in a very intricate manner with very in-depth analysis. It can become very difficult and even lead traders towards years of failing before eventually making that shift towards a higher time frame with a much more comfortable trading approach. Now, for those of you with a job or responsibilities, we're going to talk a little bit about set and forget and what that actually means. The set and forget trading style is something that's been around forever. Of course, I didn't coin this term or anything, but it generally means that if you can fit 10 to 15 minutes within your day, and I'm sure anybody can adjust or accommodate that. Let's say you get home from work at 5 p.m., you may need to eat dinner with the family and then hop on late at night and have 10 to 15 minutes to just focus and see if your entry checklist is met. This is something very basic on the left here. Of course, a little bit more goes into our specific strategy or just a trading strategy in general. However, you can hop on, let's just call it 7 p.m. and on your currency of choice or currencies, you want to be seeing, is a liquidity sweep occurring? Did a break of structure occur? Was there an imbalance within that range of the break of structure? And then take your entry percent of the range for your desired risk to reward. And then of course, followed up by risk management. But this general idea in this slide is to push the point that 10 to 15 minutes of your day is all that's necessary to really be placing orders and have an effective strategy that you can maintain profit long term. And if you can prove the ability to create a consistent edge with just 10 to 15 minutes a day, like myself has done, any of the coaches have done on our server, and tons of our students are now seeing success with a very similar model. We have plenty of funded students who are doing what I mentioned in previous slides, being able to take payouts and put them into their personal account or different assets. We have students of all different levels as well. I know I mentioned we have plenty that work full-time jobs. We have many students who may not even have employment, or other ones that are in school and have a majority of their day taken up by education, but they're still able to maintain this simple and effective strategy. And of course, giving them that ability long-term to then go and get funded with prop firms, or even reach out to private investors when they build their track record and attempt to reach that level of private investment where they can then use that money to go and leave their job and sustain off something like trading, or taking money aside and putting it into their personal account every single month and growing that and scaling it to a level where they can make their own income off their own capital. There's so many ways that trading can be scaled into a full-time income, but it will have to be something supplemental first. But I mainly push this video to get the idea across that trading can take a very little window of your day if you're learning from the right place and using the right ideas in the market. It does not have to be 1 minute time frame scalping for 3 hours a day and taking up a significant window of your time. And it does not have to be a home run hit where you hit 10% profit every single month, month after month, to really grow and make something of this industry. That is going to be all for this video of trading full time, and hopefully I gave that mindset shift to some of you to really understand the realities of this industry. Something I really pride myself on is I speak with every individual who DMs me, whether they're part of my community or if there's someone who watches my videos, enjoys the content and resonates well with it, and then just wants to reach out to talk to me or ask me questions. I've helped so many people in my direct messages kind of figure out their goal and their pathway that they need to take based on the current situation they're in or their lifestyle. And I really encourage some of you to reach out to me as well. I just enjoy talking with different people, giving them that guidance that they need. And of course, simplemarketsacademy.com, as always, that is our community. If you're interested in joining, feel free. We talk a lot more about how to scale trading and really diversify into different asset classes, leveraging prop firms or personal capital as well. So of course, any of the topics we cover on my YouTube channel are a lot more in-depth in that community, and it's also a lot more personal as well. I take pride in speaking very directly with my students and making sure every single one of them is getting that guidance. It's part of the reason we have multiple coaches as well, to make sure everything is getting answered. As always, I appreciate you guys all watching this video. Thank you again, and I will see you guys in next week's video.